I am very fortunate to have such a wonderful, diverse panel around me, and today we get a chance to really have a discussion about where we're at a very interesting time that we're looking at within India. Demonetization, or as my dear friend here has been calling it, demo, affectionately, has, of course, brought about quite a lot of extreme reactions. There are people who think that it's being done right and it's being done at the right time, and there are people who think that it's been probably one of the biggest blunders when it comes to this economy in terms of where we're poised. So without much delay, I want to get started right away. This is a panel that's going to be able to give you a bit of a snapshot in terms of where we are, and I'm going to ask Mr. Kumar first to make that presentation that he was talking about, just to give us a sense from the government perspective in terms of the initiatives that you're taking and what your immediate short-term goals are.
It's a privilege to be here, and what I'm just going to do quickly in the next 15 minutes is to set the stage with respect to what we are doing in terms of promoting digital payments. Digital payments really is a part of larger Digital India agenda, and it has suddenly been accelerated because of the whole demonetization drive. And one of the things which propels this whole argument is the high cash to GDP ratio which India has. It's always hovered between 11, 12, 12.5% of the GDP. And this high level of cash to economy, where other countries are more at 4, 5, 6%, we could actually do with half the level of cash than what actually existed in India prior to November 8. And so, once this whole initiative of more digital payments was started, it was actually started much earlier, as I'm going to talk about, but it is riding on three basic principles: that we need to have necessary digital infrastructure, which is affordable, universal, and ubiquitous. The first part of it was started sometime in mid-2014, with what was a universal financial inclusion effort, Jan Dhan. In Jan Dhan drive, which was at its peak in 2014 and 15, over 250 million accounts have been opened. And the drive holds the Guinness record for opening maximum number of accounts within a week. And as a result of which, we can now say more or less that most Indians today are as part of the banking system. The second part of this universal affordable infrastructure was about creating digital identity. Today we have 1.08 billion people who have their biometric digital identity available, and over 99% of people of adult population are covered under this Aadhaar database. 2 points I wanted to mention. One is that this is one of the, for a digital identity infrastructure, this is the world's largest infrastructure, but more importantly, it cost us as low as less than $2 per person to develop it. And today already we are doing over 30 million authentications per day. And this is now replacing the traditional system of identity verification. And if I were to take the example of issue of SIM cards, where identity authentication was necessary to issue a telephone SIM card, it used to take, a 1 week time, half a dozen documents, and processing costs. At a cost of about $1.50, we are saving about $20 billion through e-authentications every year already. And this number we still think is just the beginning. And this is why I said it's affordable and it is ubiquitous. It has enabled today linking people with their Aadhaar accounts and their bank accounts, clear identity through which digital payments can be made. I'm sorry. And the third one is the mobile coverage. We have today, for access, 1.06 billion mobile subscribers, which enables us to reach a large segment of the people through this exercise. Now, the fact remains that out of 1.06 billion mobile phones, about 350 million or 300 or between 300 and 350 million mobile phones are smartphones, rest are basic feature phones. Therefore, the choice of technologies which have been used to power digital payments enable digital transactions, digital payment transactions, both over smartphones as well as basic feature phones. Also, I would like to say that the power of this whole digital payment initiative in the country is based on three indigenously developed powerful technologies, in fact, four, if I may say so. One is the Unified Payment Interface, and now BHIM application, which has been developed, which enables real-time transfer of funds from any bank, any form of payment to another form of account or which a person may hold. It has made transfer of money as simple as actually sending an email from one person to another. The Aadhaar-enabled payment system, which is again unique to India, which enables linking bank accounts to that person's digital identity number and enables transfer merely knowing the number of the person, the Aadhaar number of that person. And third, the USSD SMS-based transfer system, which enables phones which don't have smartphone facility to transfer funds. These infrastructure have thereafter enabled digital payments. And what has really but even before I come to the digital payment ecosystem, this initiative has been going on in the form of direct benefit transfer. There are over 550 schemes which Government of India alone transfer funds to various beneficiaries across the country. And over 900 million people are receiving funds in various forms as part of this. Typical way through which in India funds are transferred is that Government of India transfers to the state government, in turn to the district administration, to the block administration, and finally to the man in the panchayat or village. Each of these layers of bureaucracy will take time, will add administrative and overhead costs, and finally, when it is to be delivered, there are potentially rent-seeking opportunities. What the digital payment initiative of direct benefit transfer has done is that it has removed all these layers, and instantaneously the money is transferred directly in the beneficiary's account. The last 2 years, over 325 million people have been transferred funds, and in the process, because these beneficiaries are now today linked through their digital identity, fakes and duplicates have been removed. The government has saved over $6 billion as part of this effort alone in the last 2 years. Only 84 schemes have been covered so far, and we are in process of covering other central government schemes, and thereafter schemes of the states would also be made part of it. This was something which was done even before November 8 initiative came. Government and its part has also been working to make government's own payments digital to a large extent. Our ministry came out with an electronics payment framework which provided a standard roadmap for all governments, whether in center, state, government organizations, PSUs, societies, to move from cash-based payments to digital payments. This was done in October of 2016. A decision was taken at the level of Cabinet Secretary that 100% payments received from government should be made electronic. And more recently, government has made a decision that every single payment which is above 5,000 rupees, roughly about $65, shall be made only electronically. So these have been some of the mandates within the government to promote digital payments. Government today is receiving over 95% of its tax receipts in form of digitally. whether it is income tax, excise, customs, etc. And over 95% of all payments made by Government of India are today made electronically. For the non-tariff part, about 50% of non-tariff revenue of government is coming electronically, and efforts are being made to increase that non-tariff portion from cash payments to digital payments. But what has really caught the imagination of people has been the post-November 8 initiative to drive digital payments in the society. And several policy measures have been taken. Broadly speaking, I don't want to go through all the policy decisions, but the thrust of these decisions has been to incentivize digital payment at all levels. The cost of transactions through intermediaries has been reduced or absorbed by the government, and this has been largely possible wherever our own technologies have been used, like UPI, Bheem, RuPay card, etc., as well as to encourage the receivers, the banks and the utilities, etc., to incentivize through suitable cashbacks and discounts for digital payment. The second important thing which government has done to encourage people is to create a differential income tax rate for small businesses to move from cash-based transaction systems to digital payments. As a result, the presumptive tax has been reduced from 8% of income to 6%, which can mean a huge difference to the tax liability. And lastly, there are very attractive gala prizes which have been declared for people who are going for digital payment. There are daily draws and there are weekly draws. There are draws for people, there are draws for merchants, etc. One of the important things, as a society, we have been a cash-oriented society. We all know in our family that we all use cash for various social, economic, commercial reasons. And to make a change, government has made most significant part of our effort has been to how do we create the awareness and the education so that people actually recognize the benefits of digital payment. And for this, two major initiatives which I'd like to mention. One was Digital Jagrati, which is largely focused for rural areas through our CSC organization called Common Service Center, SPV. This movement for creating awareness and empowerment of rural India was started in December 4th or so. And till now, in about 6 weeks, they have actually trained, enabled nearly 20 million people across the length and breadth of the country. That's something which has been one of the major initiative. The second has been the larger Digi Dhan campaign, which is again largely about creating awareness. 100 road shows are being done across 100 cities in the country, where various sets of people, segments of society are invited, encouraged to move on to digital platform. Lucky draws are held in these road shows. We have also started for rural area an education TV channel called Digi Shala, which is available on DD Free Dish, where how to use various forms of digital payments are continuously being propagated for those who are interested. Largely, for the benefit of all those who may be interested, a Cashless India knowledge repository has been created where various notifications of the government which relate to promotion of digital payment have been put up. This is my last slide. Broadly, what it says is there has been exponential growth in the new forms of all forms of digital payment. Digital wallets, which constitute the biggest segment of payment outside of plastic money, have shown 300% growth in about 2 months. UPI and USSD have shown about 3,000% growth on a smaller base in their transactions. Aadhaar-enabled payment system has shown about 1,500% of growth over in the last 2 months. So I think we are really seeing a huge transition as far as digital payment is happening in the country. Thank you very much.
Thank you. Thank you. That was Mr. Ajay Kumar. He's the Additional Secretary, Ministry of Electronics and Information Technology, just giving us a sense as to how we're looking at things from a government perspective. I just want to go right into the panel now. In fact, I'm going to ask Murli Nair, who's the Senior VP Market Developments, South Asia, Mastercard, to really give us a sense as to how Mastercard is seeing the kind of transformation that we're looking at this point. And really, are we on our way here when it comes to being a very well-serviced digital economy? What's actually happening on the ground there, Murli?
Thank you. Well, when I was preparing my kind of speech for today, I had about half a section on what Mr. Ajay Kumar has already talked about. So I have to make a fresh start in that sense. So if you connect the dots, the first thing to do was to give people in India an identity, and that was done through Aadhaar. The second thing that the government did was to give them an account into which their direct benefits transfer was transferred. That was also done over the last 3 years. We've seen tremendous growth in the number of people who have opened bank accounts and who have a debit card. At the end of December, about 750 million people in India had a debit card either issued by Mastercard, Visa, or RuPay. Now, that is a fairly significant number if you really think about the number of households in India, which is just about 260 million. If you look at the latest statistics, there are about 260 million households in India. And if you think of that as contributing to about 520 million adults, then we really have enough cards in circulation in terms of people carrying a piece of plastic which is digitally enabled. However, the last mile in terms of the two kind of leftover jobs to be done are to create an acceptance infrastructure where these cards can be used at point of sale. Indians withdrew 3 lakh crores of rupees, which is about $420 billion in cash from ATMs in the year 2016. That is a significant sum of money to be withdrawn from ATMs, and the cost of cash is about 21,000 crore rupees, or nearly $3 billion, that the ecosystem spends on an annual basis to keep this money in circulation. So what we are seeing now is the final push on the digital frontier as far as payments is concerned in India, with acceptance infrastructure likely to grow threefold in the next couple of years. We are very, very confident that this momentum of digital transformation with respect to payments will continue. There is just one request that we have of the government, to make sure that we create an ecosystem which is interoperable, which is safe and secure from a cyber crime perspective, so that either our identity or our security in terms of payments can be ensured. And for that, Mastercard plays a world-leading role. I think we are happy to contribute and collaborate with the government in developing and making sure that technology that is used to make payments is safe and secure. And we've driven that globally. We've also driven financial inclusion initiatives. We've brought in about nearly 250 million people globally in the last 3 years alone into the financially included space. We're more than happy to participate on this journey. But I think we are on a very, very good runway, and I think India is going to be one of the transformative economies when it comes to growing digital.
Murli, thanks for that. Vivek, I'm going to come to you next because just to rile you up, I'm going to make the following statement that I'm not quite sure whether the implementation of this whole digitization is being done correctly. Perhaps this is not the right time to have pushed so aggressively. I'm just trying to sort of wind him up here because I've seen all the articles that he's been writing. But Vivek, in all seriousness, I want you to sort of give us a sense as to how you see where we're poised in terms of execution and reality as well.
Is this on? Can you hear me? Thanks, Fatima. And I'm not that easy to rile up, but that's a nice try. No, I'll say this, that we can debate until the cows come home whether implementation has been slow or inefficient, efficient. Point is, we're now in an ex post facto world. Demonetization has happened, so let's not revisit old sterile debates that we could have had pre-8th November. So we are and the basic argument I want to make, and my basic thesis, is that in the long run, the exchange of the old notes for the new notes had multiple objectives. Cleansing black money from the system was certainly part of it. But I think, in my view, in the longer run, digitization and formalization of the economy are going to be the most important medium to long run benefits. So certainly there's a short run cost because of the cash crunch. There's no question about that. But paradoxically, perhaps, the heightened cash crunch because of the slow remonetization actually was a further goad towards digitization, becoming banked, towards becoming formalized. And the way that I think about this is that what Prime Minister Modi has done very boldly and courageously at one fell swoop has been, if you wish, to have the tide recede and we see all the rocks in the harbor. By which I mean, here's some basic facts, Fatima. When 80% of the economy pre-8th November was a cash-based economy. 90% of the Indian labor force is in the informal sector. Now that has begun to change. It was already changing, but that is going to change very rapidly. As people are pulled out of the gray and the black economy into the white economy, the formal economy, and I think, Mr. Kumar has talked about the government's various package of policies. The point I'd also make is that demonetization shouldn't be seen in isolation. It was part of a larger policy agenda to fix the plumbing of the economy. We talked about Jan Dhan, the JAM Trinity. And where we need to go, and again, I'll just throw this fact out, which was very striking to me. The gains from formalization are going to be huge. If we actually manage to do this right. I mean, take the textile industry. Now in China, and we have a colleague from China here, 90% of textile firms employ 50 workers or more, okay? In India, 90% of textile firms employ 10 workers or less. And those are small, relatively unproductive units. Many are not in the formal economy, many are not under the tax net, under the net of labor regulations, and so on. So you can see the magnitude of the challenge. And my basic point is that whether we like it or not, whether we think this was the right time or the wrong time, my view is that it's never too early to start formalizing the economy.
Sure.
We're now on that road. And I think, post 8th November, that's taken a huge push, and that's all to the good in my view.
Okay, and we're learning as we go along as well. Ben, I want to come to you because, of course, China is a phenomenal case of success in terms of digitizing as well as inclusion. You've also had some pretty immense worries to begin with that was sort of scaled over time. Give us a sense as to how you are viewing where we are at when it comes to India and sort of getting to the bottom of the pyramid. What do you think are key measures perhaps that can be an interplay between perhaps regulations, infrastructural development? What are some of the key takeaways you think we could possibly look at very carefully when it comes to the Chinese model?
Okay. Thank you. Good morning, everybody. And it's great to be here and to be back, actually, at the Raisina Dialogue. And the previous speakers talked about Indian stories, the digital infrastructure, obviously the story about China, especially in digital payments, the so-called digital inclusion or financial inclusion is actually a phenomenal one. And to respond to the questions, we have come a long way in terms of the partnership between the public sector, the private sector, and the private individuals. And as of today, I'm from Hangzhou, and for those who have not been to Hangzhou, it's where the digital financial inclusion, so-called slogan or policy statement was actually issued last year at the G20 summit, which was held in Hangzhou. And for that one, also, you probably know that people talked about Jack Ma. Jack Ma is from Hangzhou as well, so Alibaba, Alipay, and all those things. But from a Chinese perspective, we have focused a lot on so-called how to make sure the informal financial services are becoming more formalized. And we want to make sure that the bottom of the pyramid in terms of the smaller companies, in terms of the individuals who are kind of like excluded from the formal financial system are given a chance. And the digital technology has made it possible. The government has taken a much more open-minded approach to the development of the digital technology. So as many of you know that the top 10 so-called like internet giants globally, there are about 4 out of the top 10 are from China, including Alibaba, including Tencent. Because of the digital capabilities they have, they made it possible for the massive number of say Chinese consumers, the smaller businesses, to gain from the benefit of so-called dividend of digitization. And as of today, for example, you don't really need cash. I remember I was the day before yesterday, I was landing in Delhi. Somehow I got my mobile phone didn't work. I felt that I was actually excluded from the world for almost a day. But imagine, there are so many people still in the world who are excluded from the digital world, from the financial world, or formal financial world, for a long time, and that's part of their life. And digital technology is making it possible. And I have some of the data here, for example, about 200 million smaller businesses, are underserved or unserved at all, by the formal financial system. And there are about 2 billion adults who don't have a, formal, say, bank account in the world. And today, for example, in the case of China, you don't need actually formal bank account. As a matter of fact, they are being disintermediated in many ways. So we are, the company called Ant Financial, which is the parent company of basically Paytm, or pay through mobile in India to a certain extent. And we have, probably 500 million users in China alone. And my personal story is that, I came from rural China, and that just in like many other developing countries, the rural-urban divide is significant, despite all the improvement that we have made. And I always wanted to give some money to my mom, for example. But it was difficult, because you have to go to the bank account, and you spend half an hour trying to make a transfer. Today, I could do it within a second. Anytime I want to show my love or show my care to my parents, I send to them through the, say, WeChat account, or so-called Alipay account. And it costs me nothing. It costs me nothing. So again, it's just a story that at the personal level, which can be replicated, to many, many others, and to a certain extent, what we were trying to achieve. For example, in many parts of the world, when the inclusive finance was proposed as an idealistic thing, but it was difficult to achieve because the traditional financial services, as Boris Johnson yesterday was talking about, so-called the pyramid of finance, the traditional finance, they couldn't actually meet the demands, the unmet need of the bottom, either in the developing countries or in the rural areas or the lower income people. And digital technology is making it happen. So that to that extent, to reach the money to the bottom of the pyramid, you need the inclusive financial policy, but more importantly, you need the technology to make it happen. And I hope that we all realize that the bottom of the so-called pyramid, they are more willing to embrace new technologies. They are more willing to make a change, to adopt, because they have nothing to lose. And to that extent, what it would take is for the government, to be empowering them, for the companies to make sure the technology is user-friendly, and it's because some of the elder people, they don't actually know technology very well. So how to make it user-friendly? So that's where we come a long way in terms of the partnership. And to conclude my talk is that I see what China has gone through is so-called replicable. We are seeing great progress in India. We are seeing what's happening in say, Africa, and I'm talking with my colleagues in Latin America as well to see how China's experience and the technological, so-called standards and practices can be shared across the globe. Thank you very much.
Thanks for that, Ben. Mr. Kumar, just before I go to Murli and Vivek on the points that Ben was making, I just want to know, how is the government ensuring that it's using better, faster, cheaper, more accessible technology? How are you sort of keeping on top of that game? Because that's very essential to what we're talking about in terms of transformation.
One of the
Is it on?
Yeah. You know, one of the very fundamental principles of our, efforts to promote digital India and digital payments is being able to provide affordable technology.
Yeah.
And like I mentioned, today e-authentication is possible thanks to Aadhaar at a marginal cost which is next to zero. And this is not possible in any other part of the world today. Today, because we have our own UPI infrastructure, because we have our own Aadhaar-enabled payment system, and Aadhaar-enabled payment system is still not very popular. A lot of people do not know about it. But once and very shortly, it's today being used with certain kind of POS devices. But shortly, when it gets launched with every smartphone, and that should happen sooner than later, it will enable even those people who do not have any device to be able to make payments. And these infrastructure today cost practically zero because the government, these infrastructure are owned by government, and apart from operation cost, there is no practical cost. I also wanted to touch on the cyber security aspect of it. This is something which, cyber security basically relates to three fundamental requirements. You should have good systems to prevent any kind of cyber incident. You should have good systems to detect any kind of incident when it happens, and you should have a good system to mitigate as soon as an incident happens. I would like to say very clearly that in the government, we have, the RBI has prescribed standards which all payment systems need to enforce when they operate in the country. And these standards are at par with the best that exists anywhere in the world. In addition, CERTIN is closely working along with RBI to make sure that if any kind of cyber incident happens, that is addressed at the earliest. Very recently, we have started in December 2016, we have started a botnet cleaning and malware analysis center, which enables that as soon as any kind of a bot or a malware is detected in a banking system, the banks will get an alert about it, and they can take steps to actually clean that kind of a system. Lastly, to assure the common users, the banking system, the credit card industry already has a fairly robust insurance framework where any loss which is not ascribed to the user's apathy is compensated to the user. The digital wallet system did not have that kind of insurance framework. And I'm happy to share that digital payment industry has been working with government, and very shortly they are going to come out with an insurance framework which will ensure that people who are transacting on digital wallets will also have their money insured. So we have a very robust framework for cybersecurity as well.
Okay. That's important to know. Vivek, I just want to come to you very quickly. As an economist, what can you tell me in terms of the actual cycles we're going to go through when it comes to this short-term pain scenario that we're looking at? Because there's been a lot of criticism in terms of implementation, and I think it would be very good for us to get a sense as to how many cycles you think we should possibly be prepared for, or else even just get a sense as to how long something like this, given the scale of change, is perhaps going to take to settle in.
No, thanks, Fatima. So here, I think the IMF's recent report makes it pretty clear that the bulk of the impact has been felt in the current fiscal year, which is now ending. The IMF's forecast says there's a 1 percentage point drop in India's GDP growth. Now, that's a pretty sharp short-term drop. But the good news is, in the next fiscal year, which starts on the 1st of April, growth again accelerates, and by 2018, we'll be back on our original growth path. Now, having said that, these short-run macro IMF-type forecasts do not take account and cannot, by their nature, factor in the medium to long-run gains. And the point I want to make, and I don't think I made this terribly well in the earlier part, is that to really capitalize on the medium to long-run upside of digitization and formalization, the government is going to have to pursue an agenda of tax reform, regulatory reform, because let's face it, I mean, we use the term black money very loosely, but there are lots of reasons why people are not in the formal economy. Illicit activity is only one of them. there's an enormous burden of tax and regulation in this country still. I mean, many quarter century after our liberalization, we've got a long way to go. So I think paradoxically, again, perhaps one of the unintended long-run consequences is going to be to force the pace of, of much-needed structural economic reforms, fix regulation, fix labor law, simplify tax, and pull people, invite them into the formal economy. Don't just, so I think we need carrots and sticks, Fatima.
Okay, thank you for that. Murli, I just want you to share with us a little bit some of the stories of working in other markets. Africa, for example, is a very interesting market for us to look at. Just give us a sense as to how things sort of panned out over there, because I know there was sort of rapid growth in spurts, but I don't know where things are at the moment.
So, before we go to Africa, I think one of the interesting stories that we participated is in the digital transformation of South Korea in the late 90s. South Korea went from a country which was 95% cash to less than 10% cash on the back of a digital revolution that happened on the basis of credit cards and debit cards in the late 90s. What really happened there was what Mr. Kumar was alluding to. They created a significant push on the traditional pieces of plastic. They created incentives for both merchants and consumers through tax breaks if they did digital transactions. They also did the lottery that Mr. Kumar was referring to that's been launched in India as well. And they sustained it over a period of 36 months. And then the country went completely digital. So I think we have a recent history. It's not too long ago that a country went from 5% digital to 80% plus digital in a matter of 3 years. Talking about our Africa experience, Mastercard actively participated with the government in South Africa to issue out 17 million digitally enabled cards, which at once were both the identity card and the payment instrument as well. The direct benefits were, and the most important thing to note is that these cards came with the highest levels of encryption from a technology standpoint. So from there were 7 different direct benefit programs that were embedded into this piece of plastic, which was given to 17 million people. About 80% of them were women. And in a matter of 36 months, again, we saw a significant transformation in their socioeconomic status, because they get an identity, they get financially included, and they start transacting. And I think it's like Ben was pointing out, the point is that the people at the bottom of the pyramid are extremely friendly when it comes to embracing new technology. All we need to do, there are a couple of points that I additionally want to make. I think we are in India, in some sense, obsessed with making it extremely cheap and we think that that's the mantra for getting people financially included. There's only one different thought process that I have. The economics has to sustain the process of financial inclusion over a sustained period of time. And if we try to make the margins available wafer thin for the players in the industry by forcing down MDR, for example, I think it actually impedes because there is a cost to put out that infrastructure. Innovation will come in, but I think economic forces should be allowed to play out. And that's, in South Korea, for example, even today, the MDR is as high as 2%. So the fact that the merchant is willing to pay the 2% has sustained the dramatic growth in digital technology. I think that's important for us. And I think also that the government and its arms are not fully equipped, in my opinion, to deal with all of the requirements of the ecosystem. It requires a combination of private and public participation, along with multinationals, to come in and then solve for the problem. And we are no less motivated to solve for the problem of financial inclusion in India, being Mastercard, because we do that, and for us, it's about sustaining our business globally.
And you've been doing it for a while, and I think you make 2 very valuable points, which is that the players have to be also, there's no reason for them to be demotivated. They should have incentives, and the government also needs, they need to work together. I'm going to ask Mr. Kumar to quickly come in on that. How much interaction are you having with the private players when it comes to on-the-ground experience, and also really really creating the reality that Murli is talking about, which is that you've got these established players who've got experience from around the world. You are at the cusp of bringing about massive change when it comes to a government in terms of the economy. How, how much more do you think there is room for perhaps better interaction or better implementation when it comes to this whole initiative?
I totally endorse what Murli says with respect to need for sustainable model, and there is absolutely no question of doing this through a government infrastructure and not having private players or industry coming in part of it. The point I was making is, technology, one of the beauties of digital technologies is it's been changing rapidly. And it has always been, with new innovations, the prices have always been coming down. And both in terms of technology and business processes, the beauty of this industry has been how soon the prices can come down. In societies like India and a lot of other emerging markets, the adoption rates, as we saw in the case of mobile phones, where the adoption was very rapid because the prices came down so rapidly, here, one of the reasons why we have been able to universalize the technology has been because the costs have come down, and that's the attempt. And I'm sure that's going to create a healthy competition within the ecosystem. The whole framework which government has created is actually an enabling framework. And we encourage the participation of industry in an open platform where they should come and compete healthily. And we look forward. I mean, this is, none of the policy frameworks in the government would not want the industry to be partnering this, because this effort is mammoth. And while there has been huge growth in the last few weeks, I think we have still a long way to go, and that journey can only be completed with all the possible players coming and jointly working together on this task.
So I just want to add one great example of how government and private sector participated in a very unique project over the last couple of months. And this happened post-demonetization. It was powered by the Power Minister's office. The three networks, which is Mastercard, Visa, and RuPay, came together to create an interoperable QR standard for ensuring that digital acceptance was made available at point of sale on a lowest cost platform. And this is the first globally interoperable standard that has been developed, and it's going to be the first out, and it's going to be called Bharat QR or India QR, as the case may be. And we are very, very proud of this achievement, because this entire standard was developed in less than 3 months. Pushed and prodded by the government, of course, but I think Mastercard played a significant leadership role in bringing together all the three networks. We've also put in the bank account and IFSC code into that standard to make sure that all manner of participants can participate in that payment mode. It's going to be launched early February.
Okay, good to know that. Vivek, if I was to just ask you to simplify and perhaps just tell us, in some sense, where do you think we are when it comes to this whole journey towards financial inclusion of the bottom of the pyramid? Where, if I was to sort of give you a time and scale kind of graph there, how would you sort of describe where we are as an economy at the moment?
No, I mean, I would say a couple of things. One is I want to follow briefly what has just been said, which is, again, with all due respect, I don't think we should take too narrow and technical and technocratic a view of this process. In other words, yes, there's the whole technology of digitization.
It's limiting.
But what's, I think, to me, again, as an economist, what's more important or equally important is the overall enabling policy framework. In other words, we've got to ease the regulatory and tax burden to entice and invite people who will then automatically want to formalize, digitize, get banked, come into the regulatory net. Now, having said that, let's not forget that this is a long process. We started, as I said, with 80% of the economy operating essentially in cash, not all illicit, right, but cash. And with 90% of our workforce in the informal sector, now that's a staggering number. So this has been a major push, a major goad, but this is going to take place not over months, but over several years. Certainly, into this coming decade. And I think, again, to capitalize, to accelerate the benefits of demonetization, formalization, we've got to have the follow-on reforms, Fatima.
But Vivek, just to go back to the specific conversation on this panel, which is reaching money to the bottom of the pyramid. I was having this conversation with somebody the other day, and they said, since when has digitalization actually meant delivering money to the bottom of the pyramid? And I want you to answer that, because I found myself arguing that point, but at some stage, I was on the back foot, because they said, since when has this become the new normal? So give me a sense as an economist as to where you think this entire push really figures when it comes to actually including people who perhaps had an existence and a subsistence in another manner.
So here I would say, again, let's go back to the JAM Trinity, Jan Dhan, Aadhaar, Mobile. So this all is of a piece, right? And again, this is what we're doing is perhaps difficult and unusual in a large economy, but this has been the model in Latin America, in Africa, as we've heard. So this is nothing bizarre or strange about it, as has been said by some of the others in the panel. In fact, we often wrongly assume that those at the bottom of the pyramid don't wish to engage and don't wish to become part of the formal economy, part of the banking system. They do want to. They've been excluded perhaps because of lack of access, lack of technology, and just again, the regulatory burden. I mean, there's a reason why people don't want to fall into the net of taxation and regulation. So again, as I see it, there's a certain logical unity between JAM, between demonetization, between ease of doing business, Make in India. It all fits together. But this is a journey which will take place over the next several years.
All right.
So I have just one point that I want to make here. See, there are 59 million SMEs in India who play a very, very crucial role in this entire informal economy, as it were. And I think the GST is going to play a great role in getting them into the formal mainstream from a tax perspective, and also from a point of view of what this can do to the economy by, getting their employees seeded with financially included products. I think that's a journey that is starting off, and I think the GST, which is a major reform in the offing, will give it a big push as well. So if through the GST we can kind of digitize 59 million people and their families first, and their employees, which will be, let's say, 5 to 10 employees per head, so another 500 million people can get financially included totally by getting them into the ecosystem. And I think GST will play a significant role there.
And we're looking forward to that happening. That's GST is, of course, something that's a burning topic when it comes to all of us. Ben, very quickly, I just want you to answer on this. I'm not quite sure whether you had any sort of big cultural barriers when it came to this entire inclusion model when it comes to China. I don't know how it worked, because in India we do have a certain culture that's associated with cash. And again, Vivek, maybe I am jumping to conclusions, but I think that we tend to be very comfortable with cash, especially the further you go away from the cities. I don't know, perhaps you have that a better experience with that. But just with Ben, I wanted to just ask you very quickly, was there any such dynamic that had to be balanced in China? Were there any sort of cultural barriers that had to be crossed when it came to engaging people in a different economy?
Not really.
Okay.
I think the culture side in the Chinese is probably a little bit more modest, or a little bit more conservative in terms of talking as well. But anyway, just to probably use the opportunity, I think the theme of this talk is really the new normal multilateralism with the multipolarity. I think for what I can see for this particular session is about talking about reaching the money to the bottom of the pyramid. I think the fintech, the digital technology, digital financial inclusion is the new normal. And it does take, multilateral, as Murli was talking about, the standards, the QR codes and all those things. It does actually require a multilateral approach to make sure that some of the best technologies are being made available at an affordable price across different markets across the world as well. And to a certain extent, I think, developing markets, for the first time, we have a chance to leapfrog the technological, so-called like ladder, and also to a certain extent in terms of adoption, because in India and in China, between us, we have about 40% of the world's population. We are almost considered as at the bottom, so-called pyramid in terms of financial services. So that's where I think the opportunity is, and we are excited about it.
I think there is education needed. There's no doubt, Fatima. The point that you raise is fantastic because at the end of the day, it's about changing behavior and changing
perception,
and changing perception. It's about giving them the sense of security. They're comfortable, in my opinion, with mobile phones, feature phones, or smartphones.
Yeah.
But I think it's just next step that needs to be taken, and that's a process of education. We've been working with SMEs for a while now as Mastercard for the last 2-3 years before cashless became fashionable. We've been working with them, training these merchants to get digital, and we've been, giving them the comfort that actually gives them to greater financial access as well. So I think it's a process. Again, private-public partnership to educate consumers. There's a lot of activity that needs to be done, and I think the start has been made.
All right, gentlemen, I'm afraid we're completely out of time. I just want to say thank you very much for having been such excellent panelists. There's so much to discuss on this particular front, but thank you very much for having given us a bit of a sense in terms of what the reality is out there, where we are poised in terms of the economy, and of course, what it's really like to be doing business and getting that invaluable sort of perspective from China as well. Thank you very much.